Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007.
That's right. And today, well, we're doing a critical deep dive. We've gathered some really market-moving news from 5 different exploration companies. But the mission today is very specific. We're laser-focused on analyzing drill results that really show scale and continuity.
Not just random hits.
Exactly. We're looking for those numbers, those hard results that prove these geological systems are potentially much larger than we thought, the kind of results that really demand immediate investor attention, something you need to look into deeper.
And we got a fantastic mix today. We're talking copper, molybdenum, gold, updates from North and South America. So if you want that snapshot of which small cap explorers are successfully defining potentially major resources right now, this is definitely the deep dive for you. Let's just jump right in.
Yeah, let's do it. Our focus is always translating these, complex technical reports into what matters financially. We want to find that nugget, that single actionable bit of data confirming a significant step forward, a real extension.
Okay, first up, we're kicking off down in South America. DLP Resources, symbol DLP on the TSXV venture. They're focused on what looks like a massive copper-molybdenum system in Peru. The headline reads, DLP Resources extends copper-molybdenum system at Peru's Aurora Project with nearly 1 kilometer of mineralization. Nearly a kilometer.
Yeah, that's huge. A defining step for this project. I mean, when you're talking about porphyry deposits, and remember, these are the world's main source of copper you're looking for, sheer volume for scale. And their step-out drill hole, A25023, it delivered almost a kilometer-long intercept. Think about that. 927.45 meters, grading 0.31% copper equivalent, and starting basically right from the surface.
Okay, let's unpack that a bit. Almost a kilometer. That length is just, well, it's eye-watering. But 0.31% copper equivalent. Some might say that's generally seen as lower grade. Why is this still a major positive?
Right. It's that classic scale versus grade question. And in these big, bulk tonnage porphyry systems, volume, that sheer size, often trumps grade, provided the metallurgy works, of course. Hitting a continuous mineralized column over 900 meters, that fundamentally de-risks the project geologically. It proves the system has the kind of volume you need for potentially a very long mine life.
Even if costs might be higher with lower grade.
Exactly. And the key thing here, both holes they reported ended in mineralization. That strongly suggests the system is significantly larger. It's still open at depth. It's open laterally. There's more there.
And there was that higher grade core you mentioned too. They found an internal section, what was it, 130 meters, grading 0.50% copper equivalent. That definitely helps.
Precisely. That higher grade section, it really sweetens the economic pot, improves the overall potential dramatically. And, this project is moving quite fast. DLP is targeting a preliminary economic assessment, a PEA, for the first quarter of 2026.
Okay, and a PEA, that's a crucial step for investors, right? It's that first formal look at the project's potential economic viability.
Absolutely. So that Q1 2026 date, that acts as a really concrete near-term catalyst to watch for.
All right, let's shift gears. From base metals in Peru, we're moving to high-grade gold in Brazil. Cabral Gold, ticker CBR on the TSX venture. They're advancing their Cuiú district, the headline here. Cabral Gold hits high-grade zone at PDM, strengthening Brazil's Cuiú development story.
Yeah, this is an interesting one because it highlights how some companies are using near-term potential to de-risk the much bigger, longer-term prize. These results from the Pau de Merena or PDM target, they really validate the strength of the underlying hard rock system there. Whole DDH 346 got a pretty significant run, 23.3 meters, grading 4.7 grams per ton gold. And that's from a shallow depth, about 57 meters down.
Okay, 4.7 grams per ton gold. That's a strong grade, especially for something potentially bulk mineable. But the real eye-catcher here was that high-grade spike inside the interval.
Oh, absolutely. That's the nugget here. It included 1 meter running 91.3 grams per ton gold. Yeah, that's bonanza grade, pure and simple. And these kinds of high-grade spikes are often critical. They can represent the feeder structures, the conduits that brought the gold in, and they could anchor a much larger, significant long-term resource.
And the timing seems important here.
Yeah.
You mentioned de-risking. Cabral recently secured, what was it, $45 million in construction financing for a phase 1 near-surface oxide operation. How did these new hard rock results tie into that?
They tie in perfectly. That $45 million, it shows confidence, right? Confidence in their ability to generate cash flow relatively soon from the easier to mine oxide material near the surface. That cash flow then helps fund and de-risk the much larger, more capital-intensive development of these primary hard rock resources, like this high-grade zone they just hit, which is only about 2.5 kilometers from their main central deposit.
So it's a staged approach. Use the near-surface stuff to fund the exploration and development of the deeper, potentially bigger prize.
Exactly. It's a really smart staged approach to development. It makes a lot of sense.
Okay, sticking with copper, but pivoting north now.
Oh.
To one of the most desirable mining jurisdictions anywhere, really, Arizona. We're talking about Intrepid Metals, symbol INTR on the TSX Venture, also IMTCF on the OTCQB. The update is pretty clear. Intrepid Metals extends mineralization at Arizona's Cabral Copper, signaling district-scale potential.
And you nailed it mentioning the jurisdiction. That's vital. Arizona has the infrastructure. It has a, generally stable regulatory environment. A discovery there is often inherently more valuable than finding the same thing in a really remote, challenging place. And at their Ringo zone, the results from hole CC25041 were pretty substantial. They delivered 177.25 meters, grading 0.58% copper equivalent.
That's broad. 177 meters.
Yeah.
Nearly 2 football fields long. And why is that combination, the broad intercept with those higher grade internal zones, why is that particularly appealing?
Well, it kind of gives you the best of both worlds, you could say. The 177-meter width confirms that bulk tonnage concept. It shows there's enough volume there to potentially support a large operation. But it's that higher grade kicker inside. They hit 13.00 meters at 2.76% copper equivalent that offers real economic leverage.
Right.
So you get the scale needed for a potentially major mine, but you also benefit from these richer zones that could generate high-margin material quickly, maybe early in the mine life.
So scale plus grade equals potential profitability, all in a good neighborhood, jurisdictionally speaking. What's next for Intrepid? Any news coming?
Yeah, they seem quite active. We know assays from 4 additional drill holes are still pending.
Okay.
So that means the market has consistent potential catalysts to look forward to. They're clearly still working hard to define the boundaries of this growing multi-metal system. All right, let's stay in the U.S., just move a bit north. Idaho. Hercules Metals Corp, trading as BIG on the TSX Venture. They seem to have successfully tested a new exploration model. The headline reads, Hercules Metals' new drill model delivers long, shallow copper runs in Idaho with a silver upside.
Shallow is often a magic word in exploration.
It definitely stands out. Let's look at the results backing up the model. Hole HER 2505 hit a really impressive 273 meters, grading 0.60% copper. That's within a larger zone of 379 meters at 0.50% copper. And here's that key detail. This mineralization starts shallow, roughly 110 meters below the surface. They also reported a higher grade bit within that. 35 meters at 1.01% copper plus 6.2 grams per ton silver.
Okay, that shallow aspect. You really can't overstate the economic implication there, especially for an early stage project. It means potentially much lower initial costs.
Yeah.
Lower capex.
Less waste rock to move. Open pit potential.
Exactly. You don't need to spend a fortune sinking deep shafts or moving mountains of overburden right away. It significantly de-risks the path to potential development, makes an open pit scenario much more likely. And the silver piece is interesting too. They mentioned it's widespread near surface. That adds another strategic layer.
How so?
Well, it suggests a possibility. Maybe they could process that silver-rich material near the surface first, generate some early cash flow perhaps, to help fund the development of deeper copper resource. It's a smart potential approach.
Right, using one part to fund the next.
Potentially. And they're being systematic. They mentioned completing a 750-meter wide fence of drill holes. That methodical work is exactly what you need to build confidence towards maybe a first mineral resource estimate after their 2025 program wraps up.
Got it. Methodical progress in Idaho.
We're wrapping up in Canada's Timmins Gold Camp, a very prolific, historically important area. We're looking at Onyx Gold, trading as ONYX on the TSX Venture. The headline here speaks to consistency. Onyx Gold extends high-grade footprint at Argus North, strengthening the Munro Cruces development case.
Yeah, the Timmins camp, it's famous for its predictability in some ways, its consistent structural controls, and Onyx seems to be proving that rule true at Argus North. They are finding wide, persistent gold mineralization, and it stretches from surface down to significant depths.
What are the numbers that confirm that consistency, that scalability?
Well, look at hole MC25-195. It returned 99.5 meters, grading 1.5 grams per ton gold. That's fantastic width and decent grade for an open pit scenario. And it included a richer core, 17.0 meters at 3.3 grams per ton. Then you have hole MC25197 hitting 71.0 meters at 1.3 grams per ton gold, also with the higher grade internal zone of 8.3 meters at 3.9 grams per ton.
So these aren't just isolated hits, they're predictable along the structure.
Exactly. Highly predictable along strike, based on their reports.
Okay, so we're talking wide, scalable intercepts. And you said they extend from surface down to about 350 meters vertically. Why is that vertical continuity so important for potential mining down the road, especially in a big camp like Timmins?
It just offers maximum flexibility for the mining engineers, that kind of predictable, wide, near-surface mineralization. It translates directly into almost ideal conditions for a future, likely cost-effective open-pit mine. It means less variability, higher confidence when they eventually calculate a resource estimate. It makes planning much easier.
And it sounds like management's confidence is pretty high based on these results.
Oh, through the roof, it seems. They already had a large 25,000-meter drill program planned, which is substantial in itself, but these consistent positive results have management now actively evaluating whether they should actually expand that already large program. And, when a company is hitting such good results that they're thinking about increasing their budget midstream, well, that's arguably one of the strongest votes of confidence you can get.
Okay, so we've covered 5 companies today. DLP, Cabral, Intrepid, Hercules, and Onyx. Across copper, molybdenum, gold, North and South America. And the unifying thread, it seems to me, is how advanced exploration techniques, better geological understanding, maybe better modeling like Hercules used, it's really accelerating the process of defining true scale.
Yeah, that's a great takeaway. Whether it's using that 3D modeling to reveal the continuity like Hercules did, or smartly targeting step-out holes that prove deep resources exist under near-surface potential like DLP or Cabral, the game seems to be shifting towards proving up size faster.
Which leads to an interesting thought, maybe a provocative one for you, the listener.
Well, what's really fascinating here is the potential economic shift that comes with that. We've just seen multiple examples, right? Companies successfully extending mineralization over hundreds of meters, not just hitting it once, but showing it continues, using advanced models, using strategies like that fence-based drilling. This approach seems to define the system's scale and its predictability much more rapidly than maybe older methods did.
So the question for you as you look at this kind of data is this. If this pace of defining continuity keeps up, does the new standard for evaluating these small-cap explorers involve prioritizing this demonstrated geologic continuity, maybe even before they release a formal maiden resource estimate?
Exactly. Are investors and maybe potential acquirers too shifting their focus? Are they looking past waiting for that single official resource number and instead putting more weight on the evidence of proven multi-100-meter scale and predictability now? It's something to think about. How might this trend change which data points you prioritize when you're digging into the next technical report you read?
Definitely food for thought. Really insightful analysis today. We strongly encourage you, the listener, to dive deeper into the news releases and technical reports for all these companies, especially focusing on the specific results we highlighted.
Definitely worth a closer look. Until next time.